I think this was a speech which was almost straight out of the economic textbooks. I mean, the one thing that the equity market seemed to have been convincing itself of most of last week was that, yes, we're going to get some sort of hint that maybe the rate of increases would begin to be moderated, or that perhaps there'd be a hint that sometime in 2023 things would come down. And if you think about it, that would have been tightening on the one hand through putting up rates, whilst at the same time loosening overall financial conditions by offering this sort of get-out-of-jail-free card. And that wasn't going to get Powell where he needed to be. So he stuck completely to his guns. First, foremost, in fact, the only message is getting inflation on track. No trade-off between inflation and growth in the short term, long term, or any term. Almost a European point of view of monetary policy approach. And I think he delivered what he needed to do.
Rob, how do we explain such a negative equity market reaction? It seems like a lot of equity traders were caught out by some of his comments. Bond traders, not so much, though.
Yeah, I think that's right. I mean, that there has been a disconnect between the equity market and the bond market. At times, the equity market has been driven down by rising bond yields. But bond yields have been nosing higher for some time now. If you look in particular at things like the Fed funds futures implied yields at the end of 2023 and the end of 2024, I mean, both of them are suggesting now that rates will have risen and stayed high for quite a long period. Now, that isn't really being reflected in equity prices. We've seen a bit of softness from time to time. But, you know, to be honest, the equity market's still not really pricing in a recession. And Powell's saying you need a recession to get this under control, to get inflation down. And I think that's really where the equity market has to start thinking now. What's the right price for a US in recession with high rates thrown in?
So the US is already in technical recession. Rob, is a full-blown recession a base case now, in your view, given the rate hike trajectory to come?
I think if you read between the lines of what Powell is saying, it's almost a requirement. We do have this disconnect between supply and demand. He has to weaken the economy sufficiently to bring demand back into control of supply. And he can't do a lot about supply, which suggests that most of the heavy lifting is going to have to be done through the demand side. And realistically, that means some sort of recession. The really only big question is how bad, how long is it going to be?